And for this primary reason, I believe that Nvidia's stock might increase 100 times over the next 10 years. They are basically attempting to establish a monopoly, which is absurd in a situation like this. A level of lock-in that I believe people should really consider could be created if you have these rigs, which are the most machine learning capable, along with their SDK, nvda, which is increasingly the de facto software layer to write to their H100s or Grace Hopper when it's available, and the A100s. So, how would you respond to this if you work for a hyperscaler like Microsoft, Google, or Amazon? How would you respond to this if you were a Facebook user? This is crucial since you won't have any other options if Nvidia keeps innovating at this rate. We're talking about a fascinating subject today that has been causing a stir in the tech industry. We'll respond to a segment from the All In podcast that talks about Nvidia's most recent innovative move in the AI space. Guys, this one has me wondering, so let's get started. This is reminiscent of Intel's status as a complete, outright monopoly in the past. The distinction is that, even if you design something for an Intel CPU, it would still function well on an AMD processor. This isn't always the case, though. The model must be translated if you switch from an A100 to an FPGA or another silicon. Therefore, it's critical to realize that there is no simple extension or transition here. Nvidia will have a one-company monopoly in AI at the hardware layer if it keeps pushing innovation at this rate and carrying out its current strategy. What I took away from their recent statements is that Nvidia is prepared to compete head-to-head in what appears to be the most significant market to develop in decades. However, I believe that people are probably beginning to consider ways to mitigate that competitive outcome. In your opinion, should Chamath be valued at 200 times or 50 times? I'm with you. The straightforward aspect of the price-to-earnings ratio is that, if you flip it, you get your implied yield, correct? At present rates, Nvidia is yielding, I believe, between 2% and 2.5%, which is less than and nearly half of a normal 2-year bond. The company must expand tremendously to support that valuation when the yield is so low. A fundamental tenet of capitalism is that if you're making a lot of money, your rivals will see it and say, "Hold on, you don't deserve that much profit, I'm going to take some of that. My chance is your profit. I'm taking advantage of your margins." Let me tell you, Nvidia's recently unveiled Grace Hopper chip is an absolute beast. It is a CPU and GPU combination made especially for AI applications. In terms of processing capability, this chip is comparable to a bodybuilder who combines strength and sprinting speed. However, the Grace Hopper chip's inherent strength isn't the only thing that makes this so intriguing. It's the way this processor works with the nvda software framework that Nvidia already has. For those who may not be aware, Nvidia developed the nvda Application Programming Interface (API) paradigm and parallel computing platform. It enables programmers to take advantage of Nvidia's GPUs capabilities for intricate calculations. This hardware and software combo is really powerful. It's similar to having the most sophisticated GPS system with the greatest automobile engine. You're driving more intelligently, not just faster. But there's a serious issue here that we must deal with. The podcast guys are concerned that Nvidia might wind up controlling the market for AI gear. Let's take a closer look at this. Nvidia may effectively control the whole field of AI development if their Grace Hopper chip becomes the industry standard for AI hardware, especially given their already strong position with nvda. Big tech firms like Amazon, Google, and Microsoft might be forced to employ Nvidia's hardware as a result, regardless of their personal preferences. Consider this. When it comes to AI hardware, these businesses may have few options. Additionally, fewer options frequently translate into greater prices. Because, well, where else would these companies go? Nvidia might raise pricing. Because it might inhibit competition and innovation. This possible monopoly is a significant problem. But don't worry, everything is not bad. This story has more than one side. An intriguing argument regarding how this circumstance might potentially lead to fierce competition is also raised in the podcast. Other businesses, such as AMD, may feel pressured to innovate and create their own competing alternatives if Nvidia sets the standard this high. The AI market as a whole might benefit greatly from this kind of competition. Imagine various businesses vying with one another for superior AI performance, faster chips, and more effective architectures. This might speed up innovation, which would be advantageous to developers and end users alike. The "your margin is my opportunity" theory, in my opinion, is precisely what takes place. What I'm waiting for, Friedberg, is that Nvidia will probably run away with this in the next 2 quarters if AMD, Facebook, Google, Microsoft, and Amazon don't make any significant announcements. I think that's really dangerous. However, Nvidia's price is actually low in that scenario. However, my wager, which is a variant of your wager but has the same result, is that I don't believe it will occur because it is simply too significant. I take it that everyone wants vendor diversity except for Nvidia. You don't want to be restricted to using only one SDK or piece of hardware from one company. The only people who desire that are Nvidia and its shareholders. I'm betting that you'll start to see some genuine activity over the course of the following 2 quarters. Other businesses will need to balance their projections so that Nvidia plus competitors is not just 100% Nvidia. I would wager that, as it just seems reasonable and correct. Otherwise, these hyperscalers would be acting quite irresponsibly if they simply threw their hands up and handed the entire market to Nvidia. The other issue is that AMD lacks a deterministic AI chip, despite having an excellent memory solution. Here, Lisa Su must take decisive action, either construct something, make an announcement, or purchase something, but she must do it with aggression. When it comes to language models, many of them are really being built with progressively less CPU/GPU resources. As I shown in a previous episode, there has been a race or competition, particularly on Hugging Face. According to several of the researchers working on these language models, there is a great deal of inefficiency. Just because of software and code advances, what cost $2 to $3 million last year now costs about $200,000. Crazy, huh? This is what I'm thinking then. Nvidia's action is unquestionably audacious. They are at the forefront of AI hardware thanks to this power play. However, does it actually indicate a monopoly? I'm not entirely sure. The tech sector is renowned for its surprising innovations and quick evolution. Competition is still very much alive. Who can predict what new technology might be developed to meet this challenge? But enough about my opinions, I'd want to hear what you folks have to say. How do you feel about Nvidia's approach? Is this only the inevitable development of innovation in the AI sector, or do you see them establishing a monopoly? If you would like any other changes, please let me know. Nvidia has already experienced a 20% decline from its peak. It's down more than 30%, I believe. Yes, it costs more than $130. The stock fell 50% in 2022. Therefore, you must own these equities as a component of a diversified portfolio rather than as your sole asset. Because much of its value is already priced in, it's acceptable to hold it, but be ready for the potential that the market as a whole may be rising while Nvidia is sharply declining. Of course, investors are anticipating Nvidia CEO Jensen Huang's speech at the Goldman Sachs Communacopia conference tomorrow at approximately 10:20 a.m. Eastern. More information regarding the cost of the company's next-generation chip is what investors are seeking. I am grinning because I am thinking of Elizabeth Warren. Nvidia made a suggestion during the most recent earnings call that if costs increase, gross margins may fall to the mid-70s. Although the stock has dropped almost 20% from its most recent peak, it has still increased by more than 130% in the last 12 months.